Good morning everyone, it's Chris here from Student Education with the 4 majors notes update for the 29th of August 2012. Now folks, just going over the 4 majors, starting with Euro against US dollar. Let's have a look and see what's been happening. Yesterday, bullish engulfing candle on the daily, moving higher, but not high enough. You can quite clearly see here we've had a lot of resistance here over the past couple of days. This is now going into, what's its first, second, third, fourth, fifth day, consecutive day, resistance above us, the same area, roughly around the 12,255 mark. So got to see that broken. However, the more we look to the upside, the more likely is we see a lot of resistance above us. We have this 12,700, 12,6,500 mark coming in quite sharply above us, plus the downside trend from our major downtrend. Quite clearly see price has been moving lower. Euro against US dollar has been falling drastically over the last number of years, and if I just zoom back in and again, you can see we've had a lot of resistance through here. So a lot of indecision, a lot of consolidation at this level. Okay, so if we're going to see any further upside, do need to see price breaking and closing higher than this. However, the more it looks to the upside, the more congested it looks at the top. So are we seeing the end of this bullish trend for now? Are we going to see starting to see price now going to be pulling back? If so, what we do need to see is a bearish engulfing candle. A candle that engulfs this entire top 5-day range, this consolidated range. Bearish engulfing here would definitely confirm that the sentiment upside is no longer looking favorable for positiveness. We should be looking for downside movement, and if that was the case, if you saw a nice bearish engulfing candle here, then our target would be the 12,350 prior major support and resistance, which is way back down here again. So straight away, if you want to see any further upside movement, we need to see price trading above this range going into the US session this afternoon, and we should see potentially this 1265, 12600 mark ever being tested. Otherwise, failure to do so, we could see congestion yet again, or consolidation at this area here. Ultimately, the other flip of the coin would be a bearish engulfing candle, which tell us that this is genuinely now at a ceiling level. There's no more buying, there's now selling, and we should be looking to the downside for any opportunities. You can see that price over the past the past month or so has been trading in a channel to the upside. The CTC has recently just gone blue on the daily. However, we are in this channel. It's trading in a consolidation channel over here on our 5 days. So if you move to our 4-day chart, you can see quite clearly price moving sideways. Okay, there we go, consolidating, and you can notice straight away that we had an attempt just recently of 1258. Okay, what has RSI been doing? Now RSI we want to see moving with price, so it's definitely confirming that the sentiment behind the move is positive. You can see that this attempt over here, for example, not bad. However, we've had a second attempt of the same high just recently here on the 28th, yesterday at 6 p.m. GMT last night. We had attempts of that high. However, the RSI was lower. You can see a lot of indecision candles now after that bullish engulfing candle. And you can see that RSI is starting to drop. So it's telling us that sentiment might be very well losing ground. It seems to be potentially more selling contracts in favor now than buying sentiments or buying contracts. So we could see potential for price to move downside. There's a lot of indecision candles here, spinning tops, and we do need to see price breaking and trading above that 1258 in order to see that 1260 etc. being attempted. However, it looks like we're seeing a slowdown. It might be very well that we start looking at 1250 to the downside. You can see there's a lot of consolidation around this area here. A lot of attempts at 1259, 1260, 1249, 1248 in this area here, which is bring us back towards a 50 period moving average as our first target intraday if we still see resistance here at 1258. Next up is sterling. Let's have a look and see what's happening on the daily. Pullback just recently after this major break of the 15,750, and as long as it maintains above 15,750, then long term what we're going to see is a push to the upside. You can see yesterday's candle, almost this little hammer, supportive hammer here. You can see engulfing the prior day. So yesterday's candle, this Tuesday candle engulfing Monday's range, and as long as it stays above this area here, you can see now it's now trading above a 50% fib extension or retracement area. So I took the high of May down to the June. You can see price has been moving towards these fib, been using these fib retracement areas as targets. Breakout move to the 61.8, push back, let's move back towards the 50% line. Now it's found support. As long as it maintains above this area here and still trades above 1575 long term, but also above this 15800, then we should look for price to head off towards that 5900 mark. It's imperative that we do see price attempting yesterday's high. Notice CTC on our daily is very much in favor. So we have all the moving average below price. Our CTC were blue candle, the blue arrow, blue candles. CTC on the other side is blue, and we've broken a major resistance recently. So everything on our daily looks very positive at the moment. Move to our 4 hour, and you can see there's a bit of indecision as such. You see price testing the 27th high here yesterday, 28th, moving higher on the 6 o'clock, but however not really moving with momentum to the upside after that massive move to the upside yesterday at 6 p.m. GMT. Falling back, and as we stand now, we're still trading lower. Loads of small trading ranges. Candles are not really giving us a lot of sentiment. Spinning tops, very indecisive. We want a decision candle, guys. We don't trade indecision, we trade decision. So we've got to wait for that decisiveness to occur. You can see we are trading about 1575. Fantastic. Ideally, you can see that 50% retracement line was at the 15800 mark. So I'll just make a quick note of that. Just make it in black and make it dotted. So there we go. So as long as price stays above this area here intraday, 15800, then this is going to be the 50% retracement on our daily. So if it stays above there, then obviously it looks like we're going to find support. We want to see a nice bullish engulfing candle here intraday, and then we can target this 15900 long term. So just make a note of your small time frames. 15800 is our intraday support for this pair. As long as it maintains above that area, then we should see price looking to actually move or work with that. You can see if I move into my hourly support, you can see a lot of negative sentiments. Yes, we've been pulling back from that 5900. However, you can see the institution moving average is still below price, as well as the other two moving averages. Notice what's been doing through the Asian session. A lot of indecision candles, guys. A lot of dojis and spinning tops. We don't trade this. Okay, so as it stands now, looking for an opportunity, we need to see a decisive candle on our hourly. Okay, well, for me, got to see yesterday's high being broken. You can see the high at 6 p.m. yesterday. That's the highest it got. So a break and close above that higher there would generally look to tell us that sentiment is now looking positive, upside, favorite. And if that's the case, if I can draw a straight line, it'll be great. There we go. Then a break and close above that area here at 15.83 would be fantastic, because it'll be moving all above. It'll be above all the moving averages, which is great. Hopefully by then the candles, if we get a break and close here, we'll start getting a blue arrow, blue candle, and the CTC will go blue. Notice the RSI is still above 50. Yes, we are getting negativity, but the RSI is still above 50. So even if this is still looking negative above here, we're still trading above all the moving averages, which is not negative. We're still trading above a prior Feb retracement area, which is not negative. RSI is still positive, which is not negative. So everything at the moment now is very out of tune. Okay, so as long as we maintain above 1575, we're still positive. Above the institution, still positive. Above RSI, we're still positive. It's just that the actual template itself, i.e. arrow, candle, and CTC on the other side, is looking negative at the moment. Okay, if this is genuine negativity, it needs to be trading well below 1575. Otherwise, we'll be trading or shorting into a major resistance, which is a no-go. Moving on to US dollar Swiss franc. Let's have a look and see what's happening on the daily here. Yesterday, bearish engulfing candle at a resistance level. 960 here is a Fib retracement area. Sorry, a projection area. And that projection I've taken from a Fib May to the June high, back towards the June low, and projected the Fib extension numbers here. And you can see that 23.6 is where price is trading at the moment now, below that 960 mark. You can see price has broken or fallen low over the past couple of days, pulled back, a bit of consolidation as profits been taken, and yesterday we saw another bearish engulfing candle at this resistance level, at the underside of this 960 mark, which happens to be at the underside of the 23.6. So as it stands now, we do need to see, you can see on the Asian session, a bit of a pullback. Going into the European session open, 955 happens to be a little bit of a support, a consolidation support area here. So it's imperative that we get to see price trading below that now, breaking through this area. Oops, my line has just gone a bit squiff, but you get the message. So break and close below 955, and that would generally be telling us, listen, get in, stop above here at 960. I'll go 963ish and change, and our target would be down here at 940, and the institution moving average as the next support and resistance, as that's a clear consolidative range in this area. You can see quite clearly here at 945ish. You can see price is definitely consolidated in that area. So prior resistance, support, 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 support. So heading down towards here, there's a good 90 odd pips inside that trade. It'd be nice to get a nice breakout. So take away that, probably still get away with 50 or so. So that's not a bad return if you just be patient. Just be patient enough to see a nice break below this. Otherwise, if you're looking for potential trade, there's nothing else other than that. Sentiment is negative. We should be only looking for shorting opportunities. CT is telling us we should only looking for opportunities to the downside. There's the 4-hour chart. You can quite clearly see a little hesitation here, just around the 955 mark. But as long as it maintains below this 960, then that's going to be our new resistance. You can see the overall trend is negative. So our intermediate trend or intraday, which is definitely looking negative. You can see the highs here at 1000, swing low, swing low, swing low, swing low, swing low. It's price is trading below all the moving averages intraday on our 4-hour. CTC is very much red across the board. We are in a consolidative range at the underside of a major resistance level. So as long as 960 remains as resistance above us, we should be looking for price to potentially start to fall lower. But in order for that to be a genuine sell opportunity, we need to see bearish engulfing candle closing lower. It needs to be a close lower, bearish engulfing, a nice candle, bearish intent, very little wick, telling us yes, I am looking to go short. I don't want to go higher. I'm still looking bearish. Otherwise, hang on, be patient. You're going to have a lot of indecision candles the last 12 hours, but clearly 955 is a support area. As long as it maintains below this area here at 960, a lot of resistance above it. As long as it's been it's capped, 960 remains a resistance, then we could ultimately see price starting to favor the downside. Very interesting that's happening on the hourly. If I just take out yesterday's trend, is you'll notice that 955, as I mentioned, is this little consolidative range. Notice what the RSI has done. So here you can see it bottomed out at roughly 954, and you can see attempts of 954, RSI down the bottom here. A reattempt of it just recently, and you can see RSI is a lot higher than the prior attempt down the bottom here. So it's starting to tell us that this negative sentiment is starting to favor a bit of bullishness. You could see a change here. However, it's coming at the underside of a major support and resistance level at 960. You would have to get well above 50, and this price needs to be well above this 960 here in order to be positive sentiment. Otherwise, it's just consolidating at the underside of a major resistance level. You can see that swing lows, price, and the institution moving average still above price. It's still, so it's got to do a hell of a lot of work to get back above that 960, 963 mark in order to start looking bullish. So if anything, this whole area over here, to me, becomes a no trade zone. A lot of my students will laugh when I say that. There's just too much uncertainty in this area here around this major support and resistance level. You can quite clearly see we've been in this consolidative range. So if this is to be positive, then get me above 964. You get above 964, then you have all my attention. If you fail to get above 964, then you're still in a consolidative range. Okay, you're still trading in consolidative range. Close below 954, and then I'm still looking for those shorting opportunities. Okay, as long as we maintain below 960, 964, it is still negative. The sentiment is still negative. We're still making low swings. Price is still being driven to the downside. It is still negative. Okay, we don't want to second guess the market. Just give it orders. Okay, keep your trading very mechanical, like I do. Say, okay, great. You've done this, everything's looking negative, but the sentiment is looking positive. However, that positive sentiment is now being driven at the underside of a major resistance. Okay, it'll be futile to actually look for any buying sentiment here if there's a major resistance level above us. Get above all this noise above here and trade above 964, and this is still moving high into positiveness, then you have my full attention, because then if it gets above here at 964, I'll definitely be looking back at 970, which is our major price support and resistance level as our target. Otherwise, until then, I am staying away from this until I get a genuine opportunity. Okay, US dollar Japanese yen, last pair for the day. Let's have a look. Yesterday, bearish engulfing candle. This bearishness coming at a price support. You can see quite clearly here, negative candle not too long ago, hesitating in the area. Then we had an indecision doji, followed by very small consolidative bullish candle, and we saw a slight move into the upside. However, prices reverted to the downside yesterday again, and we are reattempting this intermediate support here. Tiny support, but if you look back You see that price was in this consolidated range, finding a lot of resistance at this level as well in the past. So yesterday's candle closing in around here, so you can see there is a consolidated 1, 2, 3, 4, 5th day, 5th consecutive time or day for support at a prior resistance level. So will 78.45 now become a support, and we're going to see price bouncing higher? Or if this is still to be negative, and you can see yesterday's kind of being negative, we do need to see price either today or this week breaking below the 78.45. If it does, then we should be targeting the 7800 to the downside as our long-term target. The other side of the coin would be a nice bullish engulfing candle here, a nice hammer of some sort, something along those lines, finding support here, and we could see a reattempt of the prior February retracement area here at 79.20 as our first target, back towards that institution moving average. But as you can quite clearly see here, price is now moving into a support area. Is there a trade on? Shorting side? No. Positive side, we're going to consolidation. So intraday, we're going to start seeing this slowdown. Here we go on the 4-hour chart. You can quite clearly see a lot of hesitation here, a lot of wicks to the downside. So 78.45 becomes a support. You can quite clearly see after the last 24 hours of trading, you can quite clearly see that price has been bouncing or making a support area where we have seen generally a support before. Notice the CTC is red, all the moving average above price. So we have gone red across the board here. You can see that price is moving lower. Okay, you can see quite clearly that price has been moving low from these highs here on the 20th. Swing low, swing low, swing low, swing low. If we find the last 4 hours, prior 4 hours was indecisive at the underside of the institution moving average. If this candle the next candle or the next candles after this morning are negative, and we hit a break below 78.45, then everything is generally looking negative to the downside. So we're looking for that trigger candle, guys. We do need to see this area here at 78.45 being breached. Nice bearish engulfing candle, very little wick, something like that, telling us yes, we are looking for shorts. Let's go for further selling opportunities, and our 7800 would be our long-term target. The other side, the flip side of this, is we get a bullish engulfing candle, and it moves up and engulfs all of this noise that we've seen over the past couple weeks. Then we should see price reverting back towards that 79.20, which happens to be our previous February retracement area here. The hourly, what does the hourly tell us? Trading by all the moving averages, and the CTC is very much mixed up. However, the RSI is still below 50, so the sentiment behind this move, or this consolidation here, is still negative. We're just moving in a consolidative range between that 78.40 as I mentioned, and the highs here at 78.80. So this area around here becomes a consolidative range. We don't trade any consolidative ranges. We trade anything to the upside or the downside of that. At the moment now, we are in a negative trend. Price is definitely falling. You can quite clearly see that price is edging lower from the highs. Swing low, swing low, swing low, swing low. Fails here yet again. We get a bearish engulfing candle to the downside. We should see, we need to wait for a nice bearish engulfing candle which will break lower. We'll get our red arrow, red candle, the CTC is below, and the histogram will start to go red, and then we should be generally looking for targeting that 7800 down the bottom as our next target long term. That's it, guys. That's my analysis for today on the 4 majors. Keep it simple. Build a picture. Look at major support and resistance levels. Gauge where price is trading in conjunction with those major support and resistance levels. The trend lines. If they all paint a picture of negativity or positiveness, then just wait patiently for the signals to be given in price action, and then we look at our money management rules to complement that. Otherwise, you don't trade. Okay, you've got to treat it very mechanical. You've got to treat your trading very mechanical. Otherwise, you start bringing the emotions into it, and you start coming unstuck. Okay, so that's it for today. Hope you have a fantastic trading day. Please look at any news to see if there's anything out there that's going to move the market today. Otherwise, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.